So the thing now is there's a lot of fundamentals pushing the US dollar down. And on top of that, not only, just to mention one of the biggest fundamentals that is pushing the US dollar down is that a lot of central banks, a lot of countries are selling off their US government bonds. They're selling off the US dollars. They don't want to have US dollars anymore. People are losing trust in the US dollar. So the US dollar is about to fall even more. And people actually are, when I say people, I mean like regions, countries, because as you guys know, the world trade is done with US dollar. The US dollar is the world reserve currency. And when countries lose trust in the US dollar and don't want to hold it anymore, then there's more US dollars out there for supply, which pushes the value of US dollar down, of course, and causes hyperinflation. So everything that you want to buy with US dollar becomes very, very expensive. Now, it looks like the US dollar is about to face a hyperinflation because, as I said, countries are dumping the US dollar. And this is maybe also the reason, well, I think, not maybe, I think this is the reason that the US government and the Fed is now pushing the CBDC, the central bank digital currency, because they see the demise, they see the fall of the US dollar. They already knew this was coming. They're not stupid. And this is the way they can save the situation. All right. So that's that. But in the same time, that day when you will be forced to use CBDCs instead of US dollar, that's the day when you totally lose your privacy. Like everything you do will be monitored, even on social media, whatever. You do something wrong, they can deduct money from you directly. They can deduct CBDCs from you directly. They can fine you directly. They will. They monitor every expense you have and every penny you spend and everything. So you have no financial privacy anymore. All right. So with that said, that's the fundamentals pushing down the US dollar. Another fundamental that is important to know while we're on it is that 5% of all banks in the US are facing the same situation as SVB, Silicon Valley Bank. So we know by now about the Silicon Valley collapse, Silicon Valley Bank collapse. And what is happening now is that 5% of all banks in the US have exactly the same situation or even worse than Silicon Valley Bank. So, which means they have a lot of assets that actually are liabilities. It's US government bonds, it's treasury bonds that uh, that are worthless because the interest rate has gone up so much. So the yield that they're yielding is not worth it anymore. So they may be yielding 1.5%, while the interest rate is up at, I think it's 4.75% now, which means if I buy a US government bond now, I get much better yield on it than the previous ones. So they're losing money on them. Nobody wants these bonds. These bonds become worthless. So therefore, they're liabilities instead of assets in their treasury. And when that happens, what will happen is that you will see gold spike up like this, as we saw when Silicon Valley Bank collapsed, and you will see Bitcoin, crypto, spike up like this. So we are going to be ready on the sidelines to push in our money in the right place and do the right trades. All right. Last thing on the fundamentals to keep an eye on Friday, we have red folders for US and for Canada. Canada is the GDP reading, so they will come out with the GDP rate basically, and what's expected is 0.4%. When it comes to US, we have the core PCE price index reading expected 0.4%. So this here can turn around, like cause a lot of volatility in the markets. So be ready for that. What does it say? Actually greater than forecast is good for currency. So if it's better, if it comes up better than 0.4%, you'll see the US dollar go up, which means, of course, probably gold will go down, Euro USD will, of course, go down. Other currency pairs paired against the US dollar will go down. All right, that's that. Short brief on the fundamentals. Now, a short recap.